Well, good morning. I'm Jagendra Rana. Product for our discussion today is liquidated damages insurance. Liquidated damages insurance. Normally, the construction of civil works or the erection of any plant or machinery are insured under any of the three following project policies. 1. Marine income erection. The policy covers the marine transit risk for the project materials. This is always policy, broadly covers project materials right from the suppliers, warehouse, transit risk, and then storage, erection, and commissioning risk at the project site. So MC, that is marine cum erection, is equal to marine plus transit plus storage cum erection plus erection all this or contractors all this. Second is storage cum erection. Storage cum erection or erection all this. This policy ensures the projects where the erection of plant and machinery and equipment and structures are the major part of the projects and project have insignificant civil works. And the third one is contractors all this policy. So this is an all-risk policy always issued for civil engineering projects like construction of residential complexes, bridges, factories, warehouses, bridges, road, canals, dams, hospitals, schools, etc. Fourth is contractors, plant and machinery policy. This is an all-risk policy with specified exclusions printed on the policy. This policy is given to contractors who may be using their own plant and machinery at one or different locations of the project during the policy period. So generally the items covered are cranes, bumpers, excavators and tunnel boring machines, etc., which are used for the erection, construction of projects. So this CPM policy is issued as an extension of the mother projects policy, that is marine cum erection all this, storage cum erection or contractors all this policy. So if sum insured CPM items is less than 5% of the sum insured of the mother project policy or up to the value of the rupee 25 lakh for these machines, but a value exceeds limit of 5% project policy or rupees 25 lakh in a particular, then a separate CPM policy has to be issued. Then comes advance loss of profit policy. Advance loss of profit policy or delay in startup policy. So annual consequential loss insurance or loss of profit policy are issued only to the principals or owners of the project in advance of the actual commencement of business for delay in commencement of the project. This ALOP policy covers financial loss due to delay in start of project because of the loss or damage to the project arising out of the insured peril of the project policy during transit, storage, erection, commissioning phase of the project. And then after completion of project, work, fire policy or civil engineering completed risk policy, that is CECR is given. Civil engineering or completed risk policy. So when the projects are completed, either the standard fire and LIR policy or civil engineering completed risk policies may be issued for covering the various properties, assets built up at the site of those projects, which are issued when the project are commissioned and handed over to the principals. Now all the above policies are being taken either by the principals or by the contractors or subcontractors to take care of various materials or damage or loss during the construction phase and or operative phase of the projects. Nowadays these policies, which is attracting the contractors, erectors mainly, is the liquidated damage insurance. Now, India, due to various reasons, the completion of project works are getting delayed and as per the contract, the contractors of these projects are to pay the penalties or deposit a substantial amount of money as fine to the principals for the delay in completing the projects. So that prompted to come forward with this policy that is known as the liquidated damage insurance. Now let's see what is this insurance. Business contract contains a liquidated damage provision providing for payment of a certain fixed amount in the event of a breach. So all construction projects are subject to time and cost constraints. As such, the liquidated damages are increasingly written into contracts to allow easier settlement of incurred loss or loss of revenue following underperformance of plant or delays that prevent scheduled completions. Now the question is, why do we need this insurance? Damages are often capped at 25% of the contract value but can be much higher, creating an increased need to secure insurance penetration. The liabilities under this head exceeds the level of self-assumption of risk by the contractors. Then delay in completion of large construction projects. So a delay in completing a project on time can create serious financial losses for project owners, lenders and contractors. Basically, there are three principal causes for delay: physical damage to project, other controllable events, and contractors' errors and omissions. Then insurance options. Usually first cause is covered by advance loss of profit or delay in start-up insurance as part of builder's risk policy. Second cause is covered by force majeure insurance. Third cause is covered by liquidated damage insurance only. So liquidated damage insurance is designed primarily to protect the contractor for liability for payment of liquidity damage for delay in completion or underperformance of project caused by errors and omissions by the contractors, subcontractors and suppliers. So liquidated damage insurance coverage is Section 1 delay in completion and Section 2 is performance shortfall. Now indemnification. Section 1 says indemnify the assured for ascertained net loss sustained for delay in completion of the project directly as a result of neglect, error, omission on part of the assured subcontractors and suppliers. In the engineering, procurement, design, fabrication, construction, installation and commissioning of the project. This is Section 1. Section 2 of the policy says indemnify the assured for ascertained net loss. For performance shortfall, payment should assured fail to achieve performance guarantee directly as a result of neglect, error or omission on the part of the assured, subcontractors and suppliers. So in the engineering, procurement, design, fabrication, construction, installation and of commissioning of the project. Then there are certain policy conditions. What conditions are there? Following clauses need to be attached to the policy: notice of loss due diligence clause, non-contribution clause, excess insurance clause, subrogation clause, onus of proof clause, service of suit clause, arbitration clause, cancellation clause, contract in force, arrangement for fulfillment, design of project to be consistent with standard engineering practice, liquidated damage recoveries, non-assignment, information truth, materiality, duty to notify changes, premium fully earned at inception, and then several liability notice, examination of assured, misrepresentation, project report clause. Then comes the exclusions under the policy. So losses arises under the policy of the following perils are never allowed: insolvency, financial default, war or invasion, ionizing radiation or radioactive contamination, cost of rectification, improvement of project, failure of owner, assured, subcontractor to observe, comply without timely obtained statutes, ordinance, codes, orders, permits, failure by assured to notify changes, willful or deliberate intentional misconduct or failure to comply with the terms of contract, and then any event which could be remedied or eliminated with reasonable effort. Warranty is applicable under this policy. Work to be performed by the assured under the contract to be carried out under the supervision of insured's personnel. Assured has no knowledge of any matter, fact or circumstances which is likely to give rise to claim. Performance test to be completed in conformation with industry standards. Assured shall timely obtain all permits, approvals, permissions required for and after commencement of the project. Assured shall comply with all statutes, ordinances, codes, rules, regulations. All insurance required to be obtained by assured shall be obtained and shall remain in force. So all the following standard clauses to be duly attached to the policy, and the insured should always fulfill the directives of all clauses like notice of loss, due diligence clause, etc. Now exclusions we have already seen. Then there comes warranty is applicable under the policy. Work to be performed we have seen. Insured has no knowledge of any insurer, fact or circumstances which is likely to give rise to claim. So these are very clear under the policy. Then comes specific information required. So the standard proposal form may not be available with the insurer while receiving the proposal and underwriting the risk. The underwriter must ensure the submission of the information by the insured, and the information is name, address of the proposer with the detailed list of the subcontractor working under any, whether the contractor is following the boot that is built, operate, town transfer, details of technical collaboration for the specific project, and then how long the customer is in construction business, program for prevention of fire and explosion incidents, detection and alarm system during the storage and erection construction testing phase, material whether are being stored as per the store's manual with proper planning, periodical conservations as per manual whether maintained, proper material handling equipments with the latest gadgets, fire protection system, fire tenders are available in the stores including trained manpower at the project site, proper security measures whether taken, well laid down erection procedures whether adopted, engineering design and documentation system whether strictly followed, sequential and safe erection program whether ensured, identification of safety engineer and proactive action by safety group and required training of manpower whether adopted, proper tools and plans used, stage clearance by border inspectors whether possible. For successful timely completion of a project, it is absolutely essential to ensure that project materials and equipments are received, and not only on time but also in the safe and sound condition. Reputed suppliers are chosen for the transit part of this project. Reputed ocean carriers are selected. Reputed cleaning and forwarding agents are appointed to deal with the prompt clearance of the consignment. And reputed inland route is selected for sending the consignment safely and in time. So this is the policy which is known as the liquidated damage insurance. Thank you very much.